Good day. Thanks for joining me today. I'm very happy to see you here. The secret of the way I trade, secret of the success of the way I trade is a more generalized version of top-down analysis. I call it 360 degrees analysis because it achieves the same thing as top-down analysis. That is, it aligns forces from market level, sector, industry, scorecard, fundamental strength, and technical buy point together, but it is not necessarily done with a top-down workflow. It could be done with a bottom-up workflow, top-down workflow, or something in between. I'll try to find some trade setups today using different workflows provided I have time after the regular market recap. Greetings, I'm Sagar Nandi, retired IT professional swing trading stocks for a living, active trader in the USA as well as in global markets using the systems and techniques that I developed myself, Q. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle superiorprofit, and YouTube channel Trading Profitably. All the ideas I share tend to be 360 degrees ideas because I combine forces from multiple dimensions to align with the trends. These are all the different Q components that I use. I'll use several of them in today's session as well. All of them run on Metastock platform and the technical component runs on TradeStation as well. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I am responsible for the outcome of my trades. Options trading can be risky, but it does not have to be. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. That was the last slide. Let's continue with the live systems. I don't have any predefined format for these sessions. Let's start with a look at QQQ. Why QQQ, you may ask? The answer is because 2 weeks ago, here in the market recap, I expressed my bearish view on QQQ and I publicly announced that I took some bearish trades on that. Some were using SQQQ long position and some using QQQ put verticals. That was 2 weeks ago. In the last week, we were here Friday. In the market recap, I explained why I did not get stopped out. I was continuing to hold the position. Price did not go up, did not stop me out, so I am continuing to hold my bearish position on QQQ. Has something changed from previous week? Yes, the backdrop color has changed from neutral to bearish, though it is an indecisive candle. It is a doji candle that itself is indecisive, but this signal is more than indecisive. This is indecisive at the top, which tends to be more bearish than bullish. It is not a trade signal, but it alerts us of possible down move. That is a change in the weekly backdrop. In the daily, compared to last Friday, when the traffic light color was bullish, this week we have neutral color. So we have seen some weakness in QQQ compared to previous week, but not much. And the trend is still intact because this trend line support is there. I will watch for the trend line support to be broken. If it breaks, probably my trades will come into profit. And if it comes to this trend line support, where the yellow ascending direction line is also there, I'll try to book at least partial profit at that point. Before looking at the other market ETFs, right now from this chart we can see that from the time I expressed my bearish view on QQQ, it is underperforming the market because the relative performance line is steadily coming down. If I use Q's radar, which shows the performance percentage change of different instruments across different periods of time, I've used daily interval here. I have put the 4 market ETFs. You can see over 5 days, this week was a holiday shortened week, so you could look at 4 days also. Whether you look at usual 5 days of a week or 4 days, 4 trading days of this week, or you look for Friday's data, QQQ is indeed the worst performer of the 4 market ETFs. Therefore, I had no reason to try to come out of my bearish trade on QQQ. I'm continuing to hold them. The fact that it is the weakest of the market ETFs this week is something that I consider to be in my trade's favor. Having said that, QQQ is still in an uptrend. What about SPY? See the instant difference between QQQ and SPY. Here we don't have an indecisive candle, not a doji candle. There is no indecision at the top. Plus the backdrop color is not bearish in SPY. It is neutral. Plus the traffic color in daily is not neutral. It is bullish. So SPY is doing better than QQQ. My bearish trade in QQQ was well timed. As you may recollect, prior to my bearish call on QQQ, it was much stronger than other market ETFs, but my timing was quite accurate. So far, it seems like that. SPY is also in an uptrend. I will have to wait for these trend lines to be broken to start to take bearish trades in SPY. And this view I'm sharing in several, maybe 3-4 market ETFs now, that I will need to see some of these trend lines to be broken before I start to take bearish trades more sincerely. DIA uptrend is intact, backdrop is bullish, Friday's traffic light is also bullish, much stronger than QQQ, similar to SPY. And IWM, small cap ETF, once again bullish backdrop, bullish traffic light, stronger than QQQ. Now, having said that, if you noticed, I will flip back to all the other 3 market ETFs. The weekly is certainly stronger than QQQ. Daily is also stronger than QQQ of the for the 3 market ETFs, other 3 market ETFs. But notice one thing, if you didn't, I'll point that out. IWM has a bearish indecision at the top, created a beautiful false upside breakout at the level, watermark level, which was created by a bearish headwind which could pull price down. Therefore, if price continues to go down next week, I'll not mind looking for short trades in small cap stocks. I wanted to point out the Friday's candle and indecision at the watermark resistance level. That is not bullish. The traffic light color is still bullish, but the shape of the candle, the indecision at the headwind level, those facts are not very bullish for Friday. Flip back to Dia. The backdrop color in weekly is bullish, but Friday's candle is doji-like candle at a watermark resistance. Friday's candle color is bullish, green, but the shape is not so bullish. And SPY, once again, we have a bearish indecision at the top and trying to create a false upside breakout. SPY had high down volume on Friday. I'm flipping back to all the ETFs again. Dia had less volume. IWM had high bullish volume in color, but considering the fact that it is creating a false upside breakout, it is actually bearish with higher volume. And flipping back to QQQ for one last time. Neutral color, bearish volume, but small volume. None of the 4 market ETFs are bearish in terms of trend, and QQQ is the weakest among them. Why QQQ started to be weaker than the other market ETFs? That answer may come from the mega cap index that is part of Q Global Market Breadth. In the mega cap index, we had a bearish headwind at a very high price level. Interestingly, so far, the mega cap index has not been able to break the high of that candle. Therefore, this bearish headwind became an effective signal in this case once again. That candle's color excuse me, coughing. Let me drink some water. Let me continue. The bearish headwind came in a candle of yellow color, neutral color, and this week the candle color had turned bearish with bearish indecision 1, 2, and 3. So many bearish indecision at a high price level. Backdrop color changed to bearish headwind in the weekly, and in daily we can see the relative performance is tilting down. So earlier the mega caps were outperforming. Now it has started to underperform. That is the reason, at least one reason behind QQQ underperforming as well. If you see, I'll magnify. There were multiple trendline supports. This support is broken, but some more supports are to be broken, yet to be broken. If the remaining trendline support is broken next week, that will prove to be bearish for the QQQ and maybe for the market also to a large extent, to some extent at least, and that will actually favor my bearish QQQ trade. I'll keep an eye on that. So mega caps are now starting to underperform. What about dollar index? And this is always a good opportunity to look back on what I said in the last market recap. Looking at the weekly candle of last week, I mentioned that though there was some bearishness in the daily, bearishness in terms of shape, I mentioned because of the weekly candle shape, I was not going to consider any bearish trade in dollar index, and that was very accurate analysis because it went up slightly this week. I was not ready to take bullish trades. I was not ready to take bearish trades also. Now, if you see, again, it is indecisive in terms of weekly being bullish, but daily having multiple indecision at the top. That tends to be more bearish than bullish. So weekly is telling me not to buy. Sorry. Daily is telling me not to buy because of the bearish indecision cluster at the top. Weekly is telling me not to short because of the backdrop color. So I will stand aside. Dollar is indecisive. It is in an uptrend though, with higher low, higher high. If the uptrend continues, that means even if it pulls back little bit, if the trend line support holds, then the uptrend will continue. That may put bearish pressure on the market. On the other hand, if this trend line support is broken, that may help the market to rally further. Looking at the way dollar is acting, I will assume that this trend line support is going to hold. That is a way of continuing with the trade, continuing with the trend, which is uptrend now. That is a way of continuing with the trend until the trend is actually broken. So it is in an uptrend. I'll assume it to be in an uptrend until the uptrend is broken. So I will not take any bearish trade in dollar index. What about the market internal health check? The warning signs that came for many weeks, they are continuing this week. If we look at last 4 days, this was a shorter trading week. In the last 4 days, we had one Hindenburg came from Nasdaq. We had two Bangos, irrational exuberance at the top, designed by Mr. Ian Woodward, may him rest in peace. The Bangos came in NYSE. So we have continuous warning signals in both Nasdaq and NYSE for quite a long time, but the trend is still intact. And if I look at it using weekly, daily, as I do every day, I mentioned it several times, the weekly trend line support is holding very well, very well. Every time it tries to go below the trend line support, price goes up. Because it is holding for a very long time, I will assume that if it breaks, that break is also going to be significant. So I am keeping an eye on the weekly trend line support and see if it breaks or not. So far there is no sign of breaking at all. The daily is therefore also in a solid uptrend. Let's look at sector, industry, stock breadth. Another breadth inside. This is very bullish. Whether we look at 1 month period all the way to 1 day period, 100% of sectors are up. This is bullish to the point of being overbought, in my view. If we look at industry advanced decline, that is also very bullish for most of the periods. 86% here, 92%, 96%, very bullish. And stock advanced decline is bullish as well. there is no chance of considering any short trade unless next day, Monday or maybe Tuesday, it starts to show some red color in these breadth insights. If we look at the bucket analysis, there is another signal from there which says it is overbought, that is single day jump in the percentage of stocks above upper boundary. That is the percentage of stocks in the uppermost bucket in bucket analysis. On Friday, though not Friday actually, Thursday, on Thursday, it was a holiday shortened week. On the last trading day, the percentage of stocks above upper boundary jumped from 7.2% to 19.5% in one day. That is about 12% jump in one day. Anytime this jump is more than 10%, the market tends to be overbought. That is the insight that we can get from bucket analysis. The other way of getting overbought information from bucket analysis is if the percentage of stocks above upper boundary, that is in the uppermost bucket, comes near 30-40%. That second assessment is not telling it is overbought, but the first assessment, probably unique to Q systems here, is telling that market is overbought. That is a reason not to buy, at least not to buy the stocks that are already overbought. What about technical breadth? Weekly technical breadth, that is in line with sector industry stock breadth, bullish across all the categories, strengths, continuations and reversals. So weekly technical breadth is very bullish, no alert from headwind on the bearish side. So there is no reason to consider bearish trades when looking at this. When we look at the daily breadth though, that's the last trading day of the week, Thursday this time. For all signals, it is bullish, strength signals bullish, continuation bullish, but reversals I see more bearish than bullish. So that gives us some scope of looking for bearish trades. Not a lot, but some scope of looking for bearish trades, and of course we can look for bullish trades as well. However, because the bucket analysis and sector industry breadth both are showing it is overbought, because the market is creating false upside breakout in multiple market ETFs at a very high price level, I am reluctant to buy many stocks at this point, and that is the stance I am having for several market recaps, which is a safe stance in my view. The few trades I am trading, they are doing all right. Let's look at one stock that I shared in the previous market recap. Sorry, not in previous market recap. In previous market recap, I don't remember which stock I shared, but on my website, in the Traders Club, I analyzed one stock. Let's look at that. That I did during the week in the Q Traders Club. And as usual, this was also a 360 degrees analysis looking at multiple angles. I looked at the industry, life science, tools and services on 26th March. That was Tuesday. On Tuesday, I did this analysis and shared it. The industry was rapidly deteriorating in score. I am reading this from QH. The industry itself was down by about 1.6%. So the industry allowed me to short. This is an example of top-down analysis. I'm looking at industry first, then fundamentals, then technical. So industry allowed me to short. Looked at this stock AVTR. Avantor is the name. 61% of peer stocks were down on the day I shared the analysis, and it was having negative earnings growth. So that was enough for me to consider shorting in terms of fundamental scorecard. I short based on either valuation, if it is overvalued, it was medium valued, not overvalued, or I short based on earnings growth, negative earnings growth, which was true in this case. And in fact, earnings growth was negative for last 3 quarters. It was also negative for last 1 year. Revenue growth was also negative for last 3 quarters. It was also negative for last 1 year. Those were reasons enough in terms of fundamentals for me to consider shorting. And then I looked at technicals. See how I used the trend lines. It had a robust up move in the weekly, and since this time, for the first week we had a bearish candle color, backdrop color in weekly, plus we had the bearish headwind unique reversal signal. All those came at the watermark resistance. This is weekly, therefore long-term watermark resistance, which created a false upside breakout. We had a bear release also, plus we had a reversal candle in the weekly. So a lot of bearish signals at the very top in weekly. What did the daily show? It was at jump thrust high, at price extreme high. What did it mean? It meant that it was already at a high price level, price extreme high in the band indicator, and at that price extreme high it was jumping up. Those moves are usually unsustainable, but I wait for a bearish move before shorting. The bearish move came right on that day when sharply it came down, created a reversal candle in daily as well at price extreme high, created a bear release, created a bearish pressure, and created a parent of all bearish momentum signal, big move down 3. As I have repeatedly said, this pattern does not fail much. What pattern? If we have price extreme high, jump thrust high, all of a sudden comes big move down 3 in a fundamentally weak stock. And in this case it is also in weak industry, it is a proper 360-degree setup. It could be shorted, and that is when I shared the 360 degrees analysis. Now it is a good time to look at the stock, how it played out. On the left I have AVTR, on the right I have SPY. I shared the bearish idea on AVTR on this day. After that, price went up little bit. Friday's candle shape is bearish. So it is quite common for price to go up after a breakdown at price extreme high if the SPY and the other market ETFs are also in a very solid uptrend as it is now. So it went up little bit, but not as much as SPY. We can instantly see that SPY created new all-time high intraday basis on the last trading day, but this did not go up so much. What would be the preferred trading instrument for AVTR? It was and it is still in an uptrend with high high, high low. It gave a breakdown short setup, but that breakdown setup came in an uptrend For those cases, as I have explained many times, my preferred instrument is short call vertical, or you could use long put vertical also, because those tend to be more lucrative. So if you took the trade, if I took the trade, we are still in the trade, and because the trade would be using options vertical, it would not stop out even if price went above the watermark high. So long as it comes down in next 30-45 days, the trade will end up in a profit. So it went little bit against us, however, it is much weaker than the SPY, which is on the right hand side. Shall we look at some trading ideas for this week? In the last market recap, and also I think on X, that is Twitter, I shared some concepts earlier. One is identifying trades that came in recent days but that have not stopped us out yet, and it could be taken again now. That is trade after recent signal. That's how you may say. The tactics is not trade on signal day, let's say for long trades, not buy on signal day, not buy the day after signal day also, but buy based on recent signal day. The recent may be couple of days earlier, maybe few days, few weeks also. We'll have to look at the chart. That is one tactics. The other tactics is to find stocks at price extreme high, jump thrust high, and that suddenly, all of a sudden, out of the blues, came a big move down 3. I shared one idea just now. I explained that AVTR I shared during the week, but let's look at another similar stock, and this time I'll do a mixed workflow. I'll start with fundamentals first, neither top down nor bottom up, and I'm going to look at the stock Walmart, WMT. You will see how effortlessly I can, or you can, carry out the workflows and cover all the angles. Q systems is colorful, isn't it? That's why it is very visual, intuitive. Walmart, how far is it from 52-week high? Just 2.4%. And it is overvalued. That allows me to short because it is very close to 52-week high. It would be a lucrative shorting opportunity if I have one. Earnings growth is very feeble. That is okay. It's not a growth stock anyway. Walmart is not a growth stock, and it allows me to short based on valuation. How is the industry score? I will look that up from QEdge, all using live analysis. The score was stronger earlier, now it is weakening. If you look at 3-month score, it was one of the top 20%. I can see that from the checkered background, but it has deteriorated and color is turning magenta. So it is a weakening industry that allows me to short. What about its technicals? Let's look up the Finder signals as of Thursday. It is giving a breakout short setup. Where is it coming? At price extreme high. If I look at the momentum signals, Was it showing? It is also showing bearish pocket pivot, Mobo breakout, and a bearish bongo. 3 red dots. Let's look at the technical charts now. Use the weekly daily at a glance template. What does it look like? It looks very similar to AVTR. Why so? Because at price extreme high, it was jumping higher. That move was unsustainable. In fact, it started jumping higher here, then came a big move down 3. It still tried to go up more. We wouldn't short I wouldn't short unless I had a proper short setup, but whenever I have price extreme high, jump thrust high, I start to look out for big move down 3. Once big move down 3 comes, I start to look for a possible short setup. And see what happened on the last trading day, Thursday here. It broke below trend line support with a bearish flow. So it is giving a breakdown short setup. The breakdown happened with a bearish volume, high volume. If I wanted to look at the commentary, that is a program in itself that reads the Q setup, signals, everything that is of importance in the way that I would read the charts. It shows as of Thursday, we have a breakout short setup at price extreme high. And if you scroll down, you can see other signals. None of them are in green, all in red or blue. Blue is neutral, red is bearish. So we have many bearish signals and a proper bearish short setup in a stock that is overvalued with very small earnings growth, which is expected in a stock like Walmart, and the industry score is weakening. I will consider this to be a short candidate at the very top because it is still in an uptrend with higher high, higher low. I will prefer to short using short call vertical. You could also use long put vertical. That was a workflow where I started with fundamentals. I call it fundamental first. After fundamentals, I looked at industry, then I looked at technicals. Now let me do a bottom up analysis. In bottom up analysis, I start with technicals. Let's go to Q Finder. Let's look for a buy setup. In the Twitter, I mentioned I may look for a short as well as a long setup. Short candidate worth considering could be Walmart. I'll come back to short setups, but let's look for a possible buy setup. I'm going to the buy signals. How many possible buys are there on Thursday? 127. I don't want to look at all of them. I'm going to carry out a fundamental scorecard analysis. So from technicals, I'm going to fundamentals. I'll generate a scorecard, find the stocks that are fundamentally strong, and then from there I'll further go to industry, look for stocks with strong industry score as well. All of this I'm doing live. No data is stored in my computer. Everything is live. Therefore, I don't have to sync up computers with some data source. Everything is retrieved in real time from Refinitiv. Retrieving data from Refinitiv. Give it a few seconds, please. In fact, while it is retrieving data to calculate the scorecard for these stocks that had possible by say, okay, it has come already. I could also go to age, but instead of doing that, now the scorecard is ready. What I'm going to do, I'm going to look for at least one star bullish candidate that will give me all the undervalued stocks or the stocks with high growth. I'll not look at them now from 100 something. I'm coming to 59, but I don't want to look at 59 stocks. I look up their industry scorecard. So this bottom up from technicals, I went to fundamentals, then I'm going to industries. I'm going to only focus on the industries that are among top 20% in terms of score or in terms of acceleration using this space column here. So I'm left with only 34 stocks. See, in Finder, I had 127 stocks with possible technical setup. Then I went to stock scorecard. I looked at only stocks with either undervaluation or high earnings growth. I was left with only 59. I further filtered on the industries that are either the strongest or most accelerating. I am now left with only 34. And instantly using the color code, I see several of these one star candidates have very high dividend yield. Let me sort by that. I like NEP. I'm using all the color codes to quickly identify a stock of my interest. So all of these are either undervalued or high earnings growth, or but some of them like NEP are having both undervaluation as well as high earnings growth in the last quarter, and as I quickly browsed through, it has a very high dividend yield also. So that would be a stock of my interest. Why don't I create a single page scorecard for that? And we already know this has a technical setup because I found it from bottom up. What was the technical setup? We could always look that up. We could open the chart or we could look it up in Finder now. It has a breakout buy setup at price extreme low. Interesting, isn't it? This is opposite to Walmart. This is opposite to AVTR. See how very quickly using 360 degrees analysis I am finding the most lucrative opportunities. Very strong fundamental stock breaking out at the bottom, and weak fundamental stock like AVTR, Walmart breaking down from the top. If I want to look at the related momentum signals, I can see it has a Kahuna from a squeeze with Bongo. So some momentum signals. Let's go back to the single page fundamental scorecard and see how instantly using the color code it is easy to love the stock. Dividend yield, great dividend yield of 11.7%. Utilities stock, dividends tend to be steady for those companies. Undervalued stock with high earnings growth. 3-star buy candidate. 92% of peer stocks went up on the last trading day. Insiders are buying. Reason enough to buy, and also it has a short squeeze potential. How was the industry score? We know industry was strong already because that's how I filtered, but we can now look at this industry only. Very strong. One of the top 20%, rapidly accelerating. in score. So everything is great for this stock and I will not mind buying this, but this is a time to look at the stock. Let's open it using at a glance charts. Let's use TradeStation for a while. NEP. Beautiful, isn't it? Very beautiful chart for a buy candidate. Fell very sharply. Even in weekly, it came to jump thrust low at price extreme low. In weekly, all of a sudden, it gave a big move up 3, went up, steadied at this price level, has a beautiful trend line support, closed with a very bullish shape, bullish color candle with bullish equivalent flow in weekly, equivalent to flow in weekly. And in daily, it was inside a triangle pattern, beautifully broke out of the triangle pattern. Now, I would also like to mention, if it was not a high dividend yield stock, I might not be willing to buy the stock because my usual stop loss would be below the trend line support, that is some distance away from Thursday's closing price. But because it has a very high dividend yield, I would not mind buying this. Remember the recent other stock that I shared publicly before knowing the results. Time to look at that also. MO, Altria, high dividend yield stock that also had about 10% dividend yield. I could buy it around this time. Hugely went up, hugely in terms of swing trade, and I booked profit. It came down a little bit. This could be due to the dividend ex-dividend date. After ex-dividend, it tends to come down. I think the dividend ex-dividend date was in March. This drop could be related to that. Anyway, I came out because before that, because I knew of the ex-dividend date and I did not want to take the dividend. Some people don't want to take the dividend because they know that has tax implications and price will fall anyway. After that, I could buy back after that if I wanted. I did not, but I had a nice profit trading MO, and now I am happily identifying another candidate, and let me save that candidate here, NEP. That I will not mind buying. I did not buy it on Thursday, so next week I'll see using real-time charts I could have an entry or not. And Walmart, let's go back. Walmart is a stock that could be considered for shorting. Very opposite looking charts, very opposite looking fundamentals and industries. That's how I find bullish and bearish trades in almost any market condition effortlessly, as you can do as well. Now, I mentioned about the tactics in the last market recap, or maybe one or two market recaps ago. That is, find a trade setup that came in recent days. So we are not buying on signal day, we are not shorting on signal day, we are not shorting buying the day after signal day, but we are trading based on recent signal after which price did not stop us out. And let me show an example. I want to make sure I have noted down a technical example, but I would like to look at its fundamentals and industry also. SHAK is the ticker symbol. So this is an example of a recent short, not short on Thursday, but a recent short after which price did not go up and giving a bearish shape candle on Thursday. SHAK, restaurant stock, overvalued, that allows me to short. Yes, it has high earnings growth, but that is fine. High earnings growth stocks go up rapidly. It is just 6% below 52-week low. high earnings growth stocks are expected to go up so high, but eventually they become overvalued, can go up for a while after being overvalued also, but eventually they will stop going up. And I am trying to catch the top in those stocks. If I look at its industry score, it is one of the most decelerating industries. The score itself is weak, but I have more reason to short based on deceleration. The pace column, I think unique in the Q systems. See how over 5 days it is one of the strongest in terms of pace, but on the last trading day, Thursday, it is one of the weakest in terms of pace. So that's an industry I'd like to look for shorts. The stock's valuation allows me to short. Last thing that remains is to look at the technicals. Let me close the NEP charts. Let's look at it using weekly daily. You will see how I am looking for shorting stocks at the very top, and once again it is at jump thrust high, price extreme high. Price did continue to go up for some time, created a false upside breakout here. On this candle it had a bearish flow, it had a bear release, created a false upside breakout when the weekly was neutral colored. So right on this day we had a box short setup. This is actually looking very similar to AVTR, the shorting idea I shared earlier on Q Traders Club. See how the same or similar patterns are playing out in my analysis, though I am using different workflows. So we had a box short setup on this day, and I will prove that shortly. Give me a few seconds. After that, price did go up little bit, but nowhere near stopping us out. And what would be our preferred instrument for such a trade? At least for me, it would be short call vertical or long put vertical. So we would not get whipsawed, stopped out by a sudden up move above the watermark resistance. It did go up, but then it gave a bearish shape candle before stopping us out. So that in fact gives us a more lucrative buying day. So how I use it, sometimes if I miss the signal day, I'm actually starting to use these tactics only recently. That's why I'm explaining it now. If I miss the signal day, I keep an eye on the stock. Often it does not immediately go down, or for a buy candidate after a buy setup, it does not immediately go up. That is very normal. So if it goes up little bit for a short setup but does not stop us out, it may give us a more lucrative shorting point. So if I miss the original shorting signal day, I may enter the short on this day after recent signal day, or I could add to my position if I did not take full position to start with. And I will now show the commentary. It's a beautiful piece of program because we can go back to a past day. You can see the triangle appearing on this day, and we can see that that was the day March 25th. It had a box short setup where at price extreme high, and it also gave a very squeeze move pattern. That's a very lucrative pattern as well. When price comes out of a squeeze, and the squeeze move is not so simple, just not coming out of a squeeze, it has to come out of a squeeze with high bearish momentum, and the momentum is calculated from multiple angles in this pattern analysis. So all these patterns are not straightforward one signal pattern, or not one day pattern either. So in any case, we had a bearish short setup on March 25th, and I wanted to give a live example of an entry after recent signal day, and this is a short candidate for that. Do you want one such other candidate? And interestingly, I found it quite easy to look for short candidates. Let me look at the fundamentals again. I didn't look at that. I don't want to share shorting ideas that are not fundamentally weak and are not in weak industry. So let's spend a few more seconds. I have 2 minutes more for 1 hour. Great. Instantly from the color code, we can see that it is overvalued. That allows me to short just 7% below 52-week high. Not very high growth as well. And this is in fact looking better than the last stock, because 78% of peer stocks are down on Thursday. This is a hotel and cruise industry. Let's look at its industry score. Fundamentals are looking weaker than SHAK, and industry score also. I like this more. So if I had to choose, I didn't look at the technicals yet, but in terms of fundamentals and industry score, I would prefer this stock, CHH, and not SHAK. But let's look at CHH technicals. We didn't do that yet. Beautiful. I would like to short it. In the daily, not in weekly, but in the daily, it gave a bearish flow setup on this day. That was 3 days ago. Stop I would like to put, if I took that short, I would put above trend line resistance. Actually, it would be using the Q protection signal somewhere here. That did not hit. That stop did not hit, and now we have a bearish shape, and also in this case bearish flow candle. Sorry, not bearish traffic light momentum candle. So if I did not take a short on this day, I could have a better entry on Thursday. Or another way of using it, if I took partial, say half position on this day, why I could do that? I would do that probably looking at the market being in strong uptrend. So looking at that, I might take a half position, and when I see on Thursday it came down again, which was going against the market was not so weak as we saw in the market recap on Thursday, as is this stock. So again I could add to the position to make it full position. So those are two live examples. I am exploring this concept of trading after recent signal day, and I looked for candidates for that this week, and I shared with you two. And after 360 degrees analysis, I prefer CHH. SHAK could also be shorted probably. You could look into both of them. So if I want to buy one, let's look at these few stocks one by one. WMT. This is WMT. I came back to TradeStation. This is WMT, and I'm going to look at the other stocks one after another. SHAK, and you can decide which one looks better to you for shorting. Industry fundamentals wise, all of them allow shorting. This is SHAK. This industry is somewhat similar to Walmart. And then we have CHH. That's a hotel industry, different industry altogether. Now, upon looking at them again, I see that the weekly is bullish in CHH. SHAK is neutral. Walmart neutral. Okay. My final selection out of these three, if I had to short only one of these three, I would choose WMT, because the weekly candle is looking very bearish, closing right at the low of the week, has a beautiful breakdown in daily after multiple bearish headwinds at jump thrust high, at price extreme high, where already we had big move down 3. So my selection after looking at the 3 stocks side by side, one after another, my choice is WMT on the short side, NEP on the long side. Let me delete the others. That's how I not only do the analysis, but if I don't want to take too many trades, and why I may not want to take too many shots, the reason is clear. The market is still in an uptrend in terms of the market ETFs. So I don't want to take too many shots. If I want to take one, I would rather take Walmart. On the long side, NEP to me is a safe bet because it has high dividend yield. This stock that we are seeing here, and they are opposite to each other. NEP here is break out at a low price level, and Walmart is a breakdown at a high price level, almost like mirror image. Beautiful charts, isn't it? We are at the 1 hour point. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you again in my next session, most likely next weekend. Have a great weekend, and as I always say, as these live examples show, I hope, there is no reason not to do that. Trade profitably. Thank you.